All right. Hi, happy Wednesday, everyone. Good morning. We'll give everyone a minute or two to kind of hop on. But if you're watching on Facebook Live today, we do have a workshop. I highly suggest hopping on so you can ask questions, engage with the group, and or feel free to comment down below and we will definitely get back to you. But today we have George Barrientos, habla español, with Best Rate Home Loans, and he's going to go over mortgage must knows. Not only that, he's going to go into that whole buy down concept for anyone who's representing buyers. It's super helpful on how to negotiate for your client and how you can help lower their interest. So these are must knows, must knows. And as far as listing agents, this is a great time to kind of ask lenders too, because when you have contracts and offers coming your way and there's things that sellers are asked or buyers are asking for, you really have to connect with the buyer's agent and maybe kind of dive deep into knowing more about the borrower. And those are great questions to ask for lenders. So we all have best rate home loans at our fingertips to kind of ask questions and go over scenarios, objections, things that maybe you don't understand. If you're a brand new agent, I would suggest talking to George over at Best Rate Home Loans about the difference between FHA loans, VA loans, the I-10 program, whenever people get seller concessions. I mean, the examples are endless clearly, but I would highly suggest doing that because you come across a lot of people who do ask you lender related questions, and we have a lender for that, but you want to have a gist of how to explain it and then know how to connect both of the parties so that you're able to assist the client. But George, we'll let you get started. This is being recorded, streamed live on Facebook. So anyone who's not able to see us now and wants to go back, or if you are not able to hop on or last the entire thing, we definitely will have it recorded over into Facebook. But good morning, Ms. Lori, Zenia, buenos dias, and Ms. Linda Dubois, good morning. Thanks for joining today's workshop. But George, we'll let you take it from over. I know you have some beautiful slides and a lot of information to share. So it's all you.
Awesome. Am I sharing my screen or let's see? Yeah, let me share it.
And if anyone's interested, we have Benji in the office today. If you need some furry love, come on in, stop by, say hi to Benji. And if you see me fling my arm randomly, I'm throwing this little guy. I remember there was one time David was on the call and he's like, "What are you doing?" And I'm like, "Oh, I'm throwing a toy." So fun little fact there, but feel free to say hi to Benji.
Cool. So my name is George Barrientos, for those that don't know me or haven't met me yet. A little bit about myself. I am a father of two, Jeep enthusiast, sports fanatic. I've been in mortgages since 2018. I started as a loan officer assistant for a top producer here in Arizona. Did that for about 8 months, transitioned to processing. I was a little bit of a processor for about 2 to 3 months, and then ultimately ended up getting my loan officer license at the beginning of 2019. So I've been in mortgages for a little bit now. In my short career, I've helped over 500 families. 2020, I funded over 52 million in volume. So I know a little bit about mortgages, but to kind of dive in to the first topic that I wanted to cover is I don't know if a lot of you know, but here at Best Rate, we're actually a mortgage broker. And so I just wanted to kind of go over some of the benefits of working with a mortgage broker versus working with a direct lender or retail lender. You guys know most of those big box lenders, Guaranteed Rates, Guilds, Quicken, Loan Depots. I've actually worked at a lot of the top ones, and I wish I would have moved to wholesale or broker a lot sooner, because the rates are just dramatically different. As a mortgage broker, we're not limited to just our Best Rate Home Loans rate sheet. We can actually shop rates for your buyers with several lenders, and most of them you guys already use. And we actually get the same rates from them, but we get them cheaper. We get them on the wholesale side. So I actually compared rates with another LO on LinkedIn who works at a big lender, and he was pricing, I would say last Friday, at like a 7% interest rate with no buy down, so no closing costs attached to the rate, and I was at a 5.5%. So a dramatic difference in interest rates, and that can be the difference of your client qualifying or not, just on debt to income ratio, or giving your buyers a little bit more purchasing power, right? A little more buying power. So I would say that's a huge win for everyone. The other cool thing about being a broker is that we're not just limited to one underwriter. We actually have options, and we have a lot more autonomy as well. So if we need to have a fast closing, I can actually submit your file to several lenders at once and see who can actually get it underwritten or approved faster and actually go that route. Not that we'll need to do that every time, but we can. Or on the flip side, if we have a complicated deal where, let's say, the underwriter just over conditions, meaning gives us a lot of items that we may not need, or seems a little bit more redundant, or maybe the file's starting to go a little sideways, we can actually take that file elsewhere, to another lender that maybe specializes in, like, let's say, self-employed income, or just anything that can be complicated, right? And we can get it done that way. These lenders, these wholesale lenders, are extremely motivated to get things done for us because they want us to send them more business. So, we usually have speed, we have speed here on the wholesale channel. I've had things get through in 7 days, 10 days, 15 days. Not that that's the expectation, but it's very possible. So we have a little bit more autonomy here. And the other thing is we have endless options. If you guys are running into deals that, let's say, your main go-to lender can't offer, like land loans, ITINs, down payment assistance, manufactured housing. If there's like niche products that you just can't get done elsewhere, we can get it done. And if we don't have that product already, we can actually, add a lender that provides that option so that we can add it to our product mix in-house. So there's tons of benefits. If you guys have like specific questions or scenarios in terms of what we can do or can't do, reach out to me on the side. We can have that conversation, kind of go over your scenario. If you need something added, reach out to me and Alan. We can have that conversation. So yeah, tons of benefits here on the broker channel. One of the things that I've been asked since I've been here in the past, 2 weeks now, is if we can do down payment assistance. The answer is yes. So we actually have access to the Chenoa down payment assistance program. Some of you may be familiar with it or not, but essentially we can do 3.5% down or 5% down on FHA only. And we can do it either as a repayable or a forgivable second. So a forgivable second, for those that don't know, means that after 60 on-time payments or 120 on-time payments, depending on how much assistance we give them, that'll be forgiven and it'll fall off. Repayable means that after the specific set of on-time payments, it'll be forgiven, but in the meantime, they'll have actually a second payment. Obviously, we don't want to go that route, but depending on credit, we may have to. And in order to use this product, minimum FICO is about 600. And then if we have multiple borrowers on the application and one of them doesn't have credit, that's fine. We can still use Chenoa. One of the borrowers has to have at least one score. One of the downsides is if your borrowers are ITIN, unfortunately, we can't couple the Chenoa with an ITIN product. So they have to be permanent residents, have Social Security, or be citizens. Which the next thing that I've been tasked to review, I've been asked at least, 10 times since I've been here, if we can help our ITIN clients. The answer is yes, we can. And it's actually a lot easier to get these done. Clients need to have a minimum 600 credit score. We can go all the way up to 55% debt to income ratio, which is a little bit higher than the conforming limit, which is great. And then the down payment requirements are anywhere from 20% to 25%, depending on what their credit is. If they're I-10 and they do not have a credit score, we'll give them automatic 620, but they'll have an automatic 25% down in that scenario. There's no exception on the down payment. It's either 20 or 25%. And then if they're W-2'd, we just need 1 year of tax returns, W-2s and pay stubs. If they're self-employed, we just need 12 months of bank statements. And we also can do profit and loss statements as well for those truck drivers, or anyone that has S corps or corporations or partnerships. All right. So I think everyone's curious to know about, the buy downs. I know you guys are seeing the buy downs on Facebook. You're getting the emails from lenders on, let's do a buy down. How do they work? It can be a little bit complicated, but in layman's terms, it's pretty simple. We have 3 options. We can either do a temporary 2-1 buy down, a temporary 3-1 buy down, or a permanent buy down. And the 2-1 and the 3-1, they're temporary because they're either going to be for 2 years or 3 years. Using the example here on the screen, a 2-1 buy down would work something like this. If a client was looking to buy, let's say, a $460,000 home, putting 3% down on that given day, let's say the starting interest rate or the par rate without any cost was a 5.3, their principal and interest payment would be about $2,477. If we applied the 2-1 buy down on year 1, their interest rate would actually be at 3.3%, which would give them a 1954 principal and interest payment. It's a $500 difference. Year 2, it would go up to a 4.3%, which their payment would still be lower by about $270. And then year 3, the interest rate would go back to that initial note rate that we based the buy down off of, which was at 5.3, and it wouldn't change again, as opposed to a adjustable rate mortgage where it has caps and it would adjust every 6 months or every year. At the end of year 3 or year 4, depending if you do a 2-1 or a 3-1, the cap is always going to be that initial starting note rate, which is awesome because we're using this product with the intent to refinance before that 3rd year or before the end of the temporary buy down. Because as we know, interest rates are cyclical. We're expecting rates to drop within the next 2-3 years. More than likely, it'll be sooner than that. But we have to assume that they will come down. And at that point, we will refinance them into a much lower rate, or worst case scenario, if rates are higher, they'll be locked into that lower rate that we started with. And asking for these concessions is pretty easy. I mean, it's a pretty easy sell. And I can call the listing agent for you guys to do this. Essentially, if we're doing a 2-1 or a 3-1, we'll either need we'll either need 2% or 3% in concessions. Sometimes it'll actually be a little bit less. And the benefit of doing that is instead of, having a price reduction of $10,000, $20,000, where that would only benefit the buyer by $50 or $100 in payment, we could just keep the price the same, ask for concessions, and massively drop the payment for the buyers, $500, $200, $300. It's an absolute no-brainer. Now, with these temporary buy downs, we can't qualify a buyer on the projected 2-year lower rate or 3-year lower rate. We have to qualify them off of the initial note rate. So we couldn't qualify them on the projected 3.3 on this example. We would need to qualify them on the 5.3. Now, if you have buyers that, let's say, just don't qualify and you need a lower rate to get them to qualify or to qualify for a higher bracket, then that's where a temporary buy down can come in. Which, let me get into that. A temporary buy down can come from the sellers or from the buyers themselves. And initially, if our initial note rate on that day is a 5.3, on a temporary buy down, we can reduce it, to whatever we want. So if we want to reduce it to by 1% and get down from a 5.3 to a 4.3, if that 4.3 has a 1.5 buy down, then that would be the amount that the sellers would either need to assist us with or the buyers would have to come up with. And then we can qualify them off of that permanent buy down to have more purchase power or to get our debt to income ratio where we need it to be. Is there any questions on that? I know that was a mouthful.
No, thank you. That was well explained, George. I know that's kind of hard to rephrase from an agent perspective, but Linda, Zenya, or Lori, or Sergio, any questions or hiccups or maybe clarification on how to reiterate that to potential buyers out there? Nope. Looks like we got it.
Here's another example, a little visual for you guys. This is straight from the Cromford report. I didn't want to use this because they were including taxes and insurance. So these numbers can be a little bit skewed, but just to give you guys an idea, if we're buying a $460,000 house, our estimated total payment in this case at a 5.3 rate would be $2,751. If we implemented a 2-1 buy down on that first year, our payment at a 3.3 would be $2,267, saving the client $484 a month for that first year. After that first year, the rate would jump to a 4.3, still saving the client $250 a month, give or take. And then on the third year, after the end of that temporary buy down, we would be back at the 5.3, where we initially would have been if we didn't get the concessions and we didn't implement a 2-1 buy down strategy. So this is a huge win for our clients. And right now that prices are up, that interest rates are climbing, this is a good way to get a little bit more commitment and buy-in from a client that's on the fence, that's maybe having second thoughts about purchasing a home. This is something that we can pitch to, or that I will pitch to them, and I will let them know, like, hey, like, there's nothing to be afraid. We're going to negotiate. We're going to go to bat for you guys. And if we can get this is how things are going to shake out. They'll be more amped to get the process done, to accept that offer, to go into escrow if they're going to save $500 a month. It's a win-win. So I highly recommend right now to take advantage of houses moving slower and start asking for concessions. And if you want to role play on how we can do it, feel free to give me a call. Also, like, every time, you guys submit an offer, I'll go to bat for you and I'll call the listing agent and I'll just second voice it and explain it into better detail if you need me to. And I'll do that on every single one. So that's the temporary and permanent buy down. I think that's a way to win right now with how things are. And that's a way to get an advantage and ease the pain of interest rates right now to clients, so to say. So with that said, Melissa asked me, what are some things that our listing agents can look for, right? What are some things that our listing agents can ask lenders to ensure that our deal goes through, that we have less fallout And just from experience, I definitely believe that you should be asking every lender that calls you, have you verified income, credit, and assets? Right? Has it actually been verified? Have you actually received an approval from underwriting? Whether that's automated underwriting or a physical underwriter, like, have you received an approval? And then, you guys want to know how fast we can close this. A big part of that is, do we have documents on file and have they been reviewed? And then a step further is, how old are those documents? We don't know if this client was shopping, for 90 days, right? And we have 90-day-old pay stubs, and maybe they switched jobs, they dropped that their pay dropped, they got a pay increase. We want to make sure that these are fresh pay stubs, fresh W-2s, fresh bank statements, tax returns. So, how old are these documents? And then, do you foresee any potential issues? If so, what's the workaround? What's the solution? How do we get past that if it comes up, right? What's your plan? I think if we ask these questions up front, it's going to reduce fallout, which is going to lead to more closings, which is going to lead to more commissions, right? And, I'm willing to take a look. If you guys are on the listing side and you guys are in between offers, I'm more than willing to take a second look for you guys and tell you, hey, this makes sense, or hey, it doesn't. Or I'm more than willing to jump on the phone with the lender and just kind of ask these questions on your behalf. I don't have a problem doing so. I'm here to help you guys. I'm here to earn your trust. So if that's what we got to do, that's what we got to do. Any questions on this?
Thank you, George. I personally took a screenshot. If you do get a lot of listings, I would hands down have this little cheat sheet somewhere, because sometimes we accept offers where we're like, holy smacks, I didn't even call the blender. And then close of escrow, things are falling apart and you're like, what happened? It's very important that you do your due diligence. Part of the 200-step guide of representing the seller, that is one of your value props, is that you're going to screen it. So it would be a value prop to say, I do have an A+ lender. Considering we're going to get a buyer from probably another lender, he's still going to help me to make sure that on the lender side of things, we are good. So it's a great listing presentation point. And then two, some of us kind of forget what to ask, and it's always kind of said, but no one really puts it down in writing for us. So screenshot this, make sure to ask, and then call George if you are thinking of price reducing a property right now. I mean, to traditional homes, when you're dealing with the luxury listings, I know that the concept's a little different, but if it's a traditional home and you're trying to do maybe a $10,000-$15,000 price reduction, really know what the difference is maybe of offering more seller concessions, goes down back to that buy down process. So there's a lot to learn, and I think a lot of us don't know how to kind of explain this. So when you are learning, when you're starting to, and it's like, okay, it makes sense now, but then when I had to tell someone, it didn't quite come out as organically. So tell all your friends today, hit the phones, tell your spouse, your kids, family members, because then it's going to be that much more organic for you in regards to the buy down process, because there's a lot of listings out there and they're price reducing like there's no tomorrow, when sometimes I think it would be more beneficial, if you really understood the previous slide, that it would be best to even offer seller concessions so that they can play with their percentages, because long term it's going to benefit the buyer more, and it's going to look better on your seller end. But just a quick note, thank you, George. Yeah, I love the listing questions, because this is something that you just want to staple to your desk.
And I mean, if lenders aren't calling you guys proactively, I mean, that's a red flag for me. I can't tell you guys how many deals I've won for my buyers and for my buyers agents just by picking up the phone and calling the listing agent and just explaining everything in detail. I think for me, if I was a listing agent, I would be more at ease. I'd feel more comfortable and confident presenting the offer to the sellers. And it's only going to make you look better and earn those referrals by having a minimal, fallout rate. So leverage me in that regard. I'm here to help. I don't mind at all. I'm pretty accessible. And then, that leads into the next phase of this, and that's just turn downs. With interest rates climbing right now, prices staying pretty steady, I'm sure that you've had to push away or turn down buyers that were, not qualifying due to income, debt to income ratios, or maybe, they didn't have enough buying power. Being a wholesale lender, being a mortgage broker, and being able to offer much lower interest rates, it's a win right now in this market. That's exactly the reason that I came over to the wholesale side. I had a ton of success on the retail end as a direct lender, but the difference in interest rate it's dramatic. It's huge. Like I was personally shocked when I priced where I was at to where we're at here. The difference is so dramatic, and it can be a 50,000 difference in buying power, if not more. So let me take a look at some of your turn downs due to income, due to they only qualify for 200, 250, 300. I might not be able to save all of them, but I'm confident I'll save some of them for you. And it doesn't hurt to have one more buyer, right? One more commission, one more closing. So leverage me. Let me take a second look. I'll second voice a client. I'll reevaluate the income and see what we can do to help. And on the flip side of that, even if we don't need to, one of the benefits of having such low rates is we can also reduce funds to close without having to look at down payment assistance options. And what I mean by that is if my par interest rate is at a 5.5%, the client has tons of income and they're fine in that regard, we can actually do what's called premium pricing and go up to, let's say, a 6.5% and give them a 5,000, 6,000, 7,000 lender credit to reduce those funds to close for them. If you have buyers that are short on cash. So that's another option that we have here, just with how well priced we are. So, and if you guys have anyone, send them over. I'll gladly take a look. And then the last thing that I wanted to cover, and then I'll open up the floor for any questions, is, I've had every single agent that I've spoken to ask me what my process looks like. How do I handle leads? How do I work leads? And pretty simple. Typically, I would love to have a warm introduction to the lead, meaning like if you shoot me the text, do a group chat of me, you, and the buyer. That way it's a much warmer handoff. And if you can't, no big deal. But I would prefer that. And then I'll call them right away. If I can't take an application then and there, I'll schedule an appointment. If I don't get a hold of them, I like to follow up for at least 9 times before, either retiring the lead, or I'll go back to you and say, hey, like I've called them 9 times, I've texted them 9 times, I've emailed them 9 times over however many weeks. They've been unresponsive. How do you want to proceed? And then, what we'll either retire it or we'll think of something else, right? And then once I am able to actually get a contact, take an application, I refuse to issue a pre-approval unless I have the documentation up front. So I'm always going to vet your clients to send me their documentation. I'm going to review it. I'm going to put it in file. And that way you have certainty that when I do issue the pre-approval, it's legit, it's real. It's not something that's going to blow up in your face. We've all had that. So I'm going to try to eliminate that as much as possible by taking that step and try to pre-underwrite every single application that I take. And I'll let you guys know as well. So then once that's issued, we shop, we find a home they love, you submit an offer. I would love to be copied on every single offer that's submitted. That way I can pick up the phone and get on the line with the listing agent and just go to bat for us, right? And then once we have the offer accepted, every Tuesday I'll send out LSUs, and every Friday I'll give you guys loan status update calls. And I'll do that for every single file, every single week. That's my own personal process, my personal accountability system. Tuesdays and Fridays are for updates, right? So with that said, I look forward to working with everyone and getting to know everyone in the coming weeks and just really get a chance to earn your trust and earn your business. So any questions for anyone? Like, the floor is open.
Hey, Jorge, mucho gusto.
Mucho gusto.
I have a question.
Absolutely.
I wasn't hearing the part of the ITIN, but
Okay.
I know kind of what it is. Is there such a thing of a combination, two borrowers, one with ITIN and one with regular number?
Yeah, so in that scenario, we would have to do that. We would have to use the ITIN product. If one of them has an ITIN and they're going to be on the application, we have to use the ITIN product.
Oh, okay. All right. Thank you.
Absolutely.
Lori, Xenia, Linda, Vanity, any questions from you ladies?
Nope. It all makes sense.
All right. One thing that George mentioned about what he does, the updates on Fridays, all of those little bullet points. If you do have a recall from George and Best Rate Home Loans, that is something that you can always add to the offer, as in like these are the things that are going to be going your way, because you also want to tailor to the listing agent. I think Virginia Stewart gave that tip a while back. You know, when you have to somewhat, when you're competing with a lot of offers, yours has to stand out. And the people you're working with sometimes can be kind of a value prop. So kind of memorize some of those fun tips or rewind it, because that's something I would definitely use, even if I'm talking to the other agent or sending over an email, just to remind you, George, my lender, the pre-call, you give him a call, but he's going to give you an update on Fridays. For LSU, I mean, some LSU, you have to beg for LSUs with some lenders. So for him to give you an update every Friday is pretty priceless. But I think that's it, George. And then thanks for sharing your contact information and your process on how to work the leads. But anything else? Actually, I did have a question. I forgot. I know a lot of agents are sending you leads like Raul, Gustavo, and you're calling the leads. What is the biggest kind of opportunity that's out there with people right now? Is it bad credit? Is it the interest rates that you're kind of have to talking to? But what is the common thing, if there is anything, that's holding borrowers back from getting pre-qualified?
Yeah, I mean, it's the usual suspects. Right now, the main thing I'm seeing is not having funds to close, and a lot of borrowers essentially depending on down payment assistance, which is fine, but with how the down payment assistance programs are priced right now, you know, that's pretty much taking clients out of the market with how high those interest rates are. So lack of funds to close is the main one that I've seen. Aside from that, I would say low credit or high DTI.
Okay, and in the event that they do have low credit or high debt to income, do you have a preferred partner that you recommend or suggest when they need to get on some sort of credit plan, or do you kind of just give them those tips?
Yeah, so I mean, great question. It depends. It's a twofold question, right? If they don't have money, then I can do credit simulators on my end. I can do what if scenarios and kind of see, you know, give them a good starting point of how long it'll take if they take out, you know, a new credit card and pay it off for 6 months, or if they pay this off, you know, how many points approximately will your score go up? I can give them baseline, you know, a baseline starting point. If they have money to spend to really go all in and fix their credit, I do have somebody, Ronin Credit Solutions, dudes, and the owner's name is Steve Didier, absolute pro. Every single client I've sent him, he's been able to get them taken care of within 30 days or less, usually less. So, but he is expensive. He's not cheap, right? So I don't know how many clients have $500 to $1,000 laying around that need credit fixed, but if they do, I'll send them that way. If they don't, then, you know, I can kind of work with them on a baseline level.
Perfect, thank you. All right, well, if that's all for George, thank you, George, so much for your time. He is a dial away. He's here at the office. George, are you open for videos? We have a lot of agents who love videos and want to do scenarios.
Yeah, absolutely. Anyone that's open to doing, some videos together, come through the office or I'll come to you. We can set up a Zoom chat and kind of go over things. Also, anyone that is looking for a call night buddy, I'm here in the office and I'm willing to stay here late and help you dial through your leads. So I'm just a phone call away, a text message away. And yeah,
Oh, I love that call night buddy. So we'll probably schedule like a call night for anyone who wants to attend or have fun with that. But thanks again, George. Welcome to Best Homes Real Estate. We're all excited to have you here. And so far, everyone's pretty impressed with how you're helping and assisting their clients. So we thank you very much for that. And you all enjoy your day. Thank you, Sergio, Ms. Lori, Dania, Linda, and Vanity for hopping on today. We did have a few viewers on Facebook. So if you guys have any questions, please reach out to George or anyone at Best Homes. We'll talk to you all soon. Enjoy your Wednesday.
thank you guys. Have a good day.
Bye.